Good morning, everybody, and welcome to MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. And this is what's hot on the open. This is a segment where we go over everything that's going on the opening bell, and it is an interesting morning to say the least. Now, we've covered Europe, we've covered Asia. You can go back and take a look at those shows from this morning. There was some positive Chinese economic data. Europe is on the upside, and we're now waiting for the FOMC, the Federal Open Market Committee, to come out with their decision on rates. And what I'm showing you right here is the FedWatch tool that the CME Group offers. And right now they're pricing in a 95.8% probability that they're going to raise rates to 100 basis points. It's currently right now at 75 basis points. That means that a 0.25% increase in your credit cards, in your overnight borrowing, things of that nature. You're going to see that rates are going up. This is interesting because while that isn't the most highly anticipated component of this, and it's dropped off from 99% yesterday to 95%, which is significant, I guess, from a theoretical perspective, but it's priced in. What everyone's going to watch and listen for and read about is what is their unwind strategy of this enormous balance sheet. Over $4 trillion worth of bonds and mortgage-backed securities that the Fed has been supporting for the last 7 years. And the market is actually really reacting quite odd right now going into the event. Reason being, we saw some interesting data come out here in the States. We saw that the CPI, the Consumer Price Index, it missed. It was only up 0.1%, or down 0.1%, excuse me. And there was an expectation that it would be up 0.1%. So that means that consumer prices are not increasing. That came along in line with retail sales being down 0.3%. Folks, the consumer seems to be pulling back a little bit. I talked about this a few weeks ago, and I said I was going to watch this, but the consumer right now is being more tentative, it looks like, and the data is starting to show that. Is this going to totally derail the Fed? I don't think so. I think globally there's enough growth right now, and they have to start looking at how they're going to do this unwind. But with that being said, you're seeing something that I have been harping on for 6 months. All of this data that is showing inflation, solid earnings, potential, is all fine and good, and it can support the current scenario. But the bottom line is, unless people are making more money, all this is for naught. And we are not seeing wage inflation. We're seeing a small amount, but definitely not enough that's going to characterize that we could really see some upside growth, getting GDP into that 3% range that everyone hopes for and the Trump administration says that they're going to deliver. So at the end of the day, that's what I am watching, not all in on that, but that's what I'm watching. Now, taking a look at the Dow Jones, you see it's basically off of its all-time highs, up 9 right now. You have the S&P basically flat, the SPX, and the NASDAQ up 4. You see the Russell 2000 down 5. Of course, there's going to be a little bit of a challenge here for the Russell, especially if we start to see that not only the data is mixed, but then all of a sudden we don't get the Fed statement that we want. Crude oil coming off of its lowest levels that we saw yesterday, but still well below the $50 mark, well below the $48 mark, and now still challenging that $46 mark. The bears are still in control. You see that copper to the downside, gold to the upside. That's telling you that industrial metal copper, which I brought up, watch this level here on copper. Watch this 257 level, 258. This is going to be a critical level for that industrial metal to hold. If it does not, it looks like the bears could be gaining some traction. This is what the most interesting move so far is. Take a look at the bonds. Bond prices are up pretty significantly, especially on the long end of the curve. It's understandable that the 2-year is basically flat, but you're seeing 0.6% increase in the 10-year, and you're seeing a 1.25% increase in price on the 30-year. So the long end of the curve is starting to kick up. That's unusual. Look at these spikes. The bulls were under pressure, but they didn't fold. You can see it held its 20-day moving average on the 30-year. It held its 20-day moving average on the 10-year. There's a big pop there. So maybe some shorts are covering going into the Fed announcement. Either way, what you're seeing here is a move up in bond prices, which is going to basically impact yield on the 10-year. We said that we wanted to see 10-year yield well above 220. We wanted to see it above 230. We want to see it in the range of 243% is where we're really looking at it if we're thinking growth. It's at 2.13%, folks. It's dropped precipitously this morning at the lows of the week almost, and it actually challenged that early in the session. This is putting people on notice. A couple other names and a couple other situations that I want to bring up. There was some earnings overnight. H&R Block, HRB, they came out. They had great earnings, and they also increased their dividend. Stock is up right now 9.74%. You could see that it challenged its 20-day moving average in advance of earnings. The options were pricing in the potential for the stock to move $2.89 going into this announcement. It's up $2.61. Pretty efficient. You got to watch us. And if you want to learn more about that, I have some videos as well as that break down how we actually talk about this. But we talk about these estimated moves using options. Well, going into this earnings announcement, the options marketplace was pricing in the potential for the stock to either go up or down $2.89. It's gone up $2.64 today, and as a matter of fact, challenged that $2.89 on the upside. So that was positive for H&R Block. We also saw BKD. Now, this is Brookdale Living, Senior Living Incorporated. There's a little bit of a potential M&A opportunity here, merger or acquisition. Stock's up $1.42. That's good for 10% to the upside. That was after a very volatile session yesterday. But one thing that I want to note here is that it was in a battleground on the 20 and 50-day moving average, basically for the last month and a half to 2 months, since basically late April, early May through June. And then we saw a breakout from this range above its 50, above its 20-day moving average. The bulls took control over the last 3 sessions before we saw this headline. This is where if you were looking at this stock, you could have basically tempered your emotions and said, okay, I'm seeing that there is a battle here, but there is not this tenuous, overly bearish or overly bullish. It's in this range, so I'm going to take a tempered look. And you can see that the stock yesterday went up big, but finished right on the 20-day moving average. Then after this headline came out this morning about potential M&A activity, stock is up. We'll watch that. One thing that's notable is the stock's up $1.38. The options were pricing in going in for the remainder of this week. In other words, the next 2 days, $1.66 range, either up or down. So it was pricing in the potential for this stock to move 10% going into Friday, and that's expiration Friday. So the next couple of days, options are really giving you this perspective, this insight. Also want to take a look at Nvidia. Nvidia came out this morning with a Goldman Sachs upgrade. We can see that that's helped it quite a bit. Sarcasm. Bottom line is stock's down 1%, down $1.90. At this juncture, you've seen that the options are pricing in the potential for this thing to move pretty dramatically. As a matter of fact, for the next 2 days, they were pricing in a $5 range. The stock is now down $2. So there's still $3 that were priced into this move, even despite the fact that there was an upgrade by Goldman Sachs. Now, with that being said, it's still above its 20-day moving average, still above its 50-day moving average. So this tech darling is still in play as far as the bullish side is concerned. They're not dumping the stock. because of concerns. So we're going to watch this very closely to see if there's a challenge, a break, and then if it holds, a resumption to the uptrend. Of course, there are always opportunities to play either side of this market, but right now they're pricing in a potential $5 range, and it's already moved $2 today through this Friday. Implied volatility rank is at 49. That's a scale from 0 to 100, so it's on the mid section. So there's an expectation of still some potential decent movement in Nvidia, and so we're going to watch that very closely because tech has been bouncing, but let's see if that can continue. And then finally, I want to take a look at a consumer discretionary name, Starbucks. Now, Starbucks came out. Their sales are disappointing, and they are under pressure this morning, down 33 cents. There was a downgrade from Wedbush on Starbucks, but the stock right now has an estimated range for the next 2 days of 68 cents. The implied volatility rank is at 14.5. It's already moved half that, so it had about a little over a 1% range being priced in for the next 2 days. It's down 0.5%. So for those of you that see this and they see a downgrade and they're like, oh my gosh, this thing's going to start moving to the downside really volatilely. Well, right now the options aren't pricing that in. They're pricing in about a 1% range for the remainder of this week. So let's keep an eye on that, and I think I might have tempered your fears a little bit. It allows you then to make better decisions on your holdings. All right, folks, that's it right now for what's hot on the open. We'll be back on talking at Strategy Now at 1:30 Eastern Time here at MarketStream.live. See you then.